Term life insurance versus cash value life insurance. Which one is the best and why it is the best? What is the advantage of buying the term life insurance and invest the difference? And what does that really mean exactly? What is the secret behind the whole life, permanent life, cash value life insurance? We will answer all these questions for you in this presentation. Term or permanent life insurance, which one to choose from? This is like a boxing match between the whole life and the term life pretty much everywhere in the USA. Term insurance versus whole life insurance has been the subject of an ongoing debate in the financial services and community for a very long period of time. There are a wide variety of insurance products from which to choose. Each has features that may or may not meet your objectives for protecting your family's financial future. To determine which type of insurance is right for you and your family, it is important to understand the basics of life insurance and the difference between the two instruments. We are talking about the whole life and the term insurance. Very often, many people ask themselves, do they need life insurance? Or some other people just said they don't need life insurance at all. The problem with this sort of thinking is that life insurance really isn't a should have, it's a must have for pretty much everybody. People purchase life insurance for a variety of reasons, including for paying funeral expenses, final expenses, also to secure the financial future of their family, their loved ones in case of death. People purchase life insurance also because life insurance can provide the funds necessary to pay obligations of an estate, such as estate taxes or compensating an organization for the death of a key employee of the company. Life insurance replaces income for dependents. Life insurance creates a source of savings. Life insurance can create inheritance for your relatives, your heirs, your family. Life insurance can create also inheritance for yourself if you buy life insurance on your parents for your own need. The choice between term and whole life becomes clearer once the reasons for purchasing insurance coverage are very well understood. Term life insurance. Term life insurance is exactly what the name implies, a life policy that ends after a specific period of time. Term life pays a death benefit to the beneficiaries you designate upon your death, but term life policy has no cash value in it. In other words, you can't cash in. You cannot withdraw money from the term life insurance, the policy, or borrow against it prior to your death. It is a completely different policy compared to whole life policy. We are going to discuss the whole life in a few seconds. Of course, the policy only stays in effect throughout the time period if you continue to pay your premiums in a timely manner. At the end of the term life policy, you may be able to renew for another set amount of time. Your premiums may be higher for this next term due to your increase of age or illness. You may also be able to convert the policy to a whole life policy at a later date. It depends on the insurance company you are dealing with and also depends on what kind of provisions you have in place in your policy. Different types of term insurance like level or decreasing term, convertible term, adjustable, renewable term life insurance exist. Now let's talk about the whole life insurance. Whole life insurance also provides exactly what its name suggests. A life policy made to cover you for your entire life, usually up to 100 years. Again, the continuation of the policy is dependent on promptly paid premium. Remember when I said 100 years, I said up to 100 years old. Whole life is more costly than term because it is a policy meant to last over a great length of time without a premium increase. In other words, even if you become terminally ill, your whole life insurance premiums will not go up, it will stay exactly the same. Whole life is designed to meet your permanent needs, including payment for final expenses and adding to a nest egg that can be drawn on in times of need. That's saving. The whole life has a 7 part of it, and we are going to give you more details about that. Whole life insurance provides permanent insurance coverage. Premiums are usually fixed and must be paid on a periodic basis. And this policy has an investment component that builds the cash value over the time. The funds are invested by the insurance company, and any accumulation in the account is tax deferred and can be borrowed against. Generally, the insurance company guarantees a minimum rate of growth. Let me explain this clearly. The whole life policy, for example, you might pay $150 for that policy. That's an example. But for the insurance part, you pay $100. And for the investment part, which is what we call the cash value, you pay $50. That's a total premium you pay monthly, $150. But if you have to borrow money from that account after a certain period of time, usually the whole life takes about 4, 5, or even more years before you'll be able to get some money out of it. However, any loans taken on the amount will be deducted from the death benefit paid. Meaning that the amount, the premium that you pay part for the insurance and you are paying a part for the investment. But if you need money out of that money, that's what we call cash value, you have to borrow that money with interest, sometimes high interest from the insurance company. And if you do not pay that money back, you don't have an obligation to pay it back. If you do not pay that money back to the insurance company, if something happened to you, meaning if you pass away, the first amount, that's the money they are going to pay to your beneficiaries, to your family, they will take off, they will withdraw the amount that you got from the cash value, meaning that investment you made was not for you or for your family, it was for the insurance company. The cash value feature is the main difference to consider if you are evaluating terms versus whole life insurance. Whole life policies pay out death benefit, which is capped at the face amount as expressed in the terms of the policy. When the face value amount is paid to the insured, the insurance company keeps all the cash value that has accumulated in the policy. That's one of the reasons some insurance companies or some insurance agents, they call cash value trash value. Because if you pay, whole life is expensive. The reason why it is expensive, first because it's a permanent, you get it for a long period of time, and also you have an investment part of it that we call cash value. But if you want, it takes time. It takes about, like I said, 5 years or more before you be able to get some money out of it. If you want to get some money out of the cash value, you have to borrow that money with high interest. You have to borrow your money with interest from the insurance company. That means it is not your money, it is the insurance company money. That's reason number one. Reason number two, if you don't pay that money back to the insurance company, which you have no obligation to, if something happened to you, the insurance company will withdraw that money from the face amount, from the amount they are going to pay to your beneficiaries. That's a clear proof that the investment part was not your money at all. It was the insurance company monies. Maybe that's the reason why the agents who are selling whole life policy, they get paid very well, and most of the times, I can tell you that they drive luxury car, they live in the luxury apartments, and they're gambling a lot because they get paid extremely well for the whole life policy. It's not only that, the insurance company will withdraw the money if you pass away. Not only that, you have to borrow the money with interest. And when they withdraw the money from the face amount, I'm talking about the money if you pass away, they are going to pay to the beneficiaries. They are going to withdraw that money with high interest on it. And not only that, you pass away, the cash value, no matter how much money you have on it, no matter how long you are paying that insurance, 5, 10, 15, 20 years, the cash value, which is the investment part, the insurance company is not going to give it to your family. I'm sorry if you did not know that. The insurance company will keep that money. It's not your money. Fair. Remember that. If you need money out of it, you have to borrow it with interest. You have no obligation to pay it back. If you don't pay it back, and they will take it out of the face amount which they will pay to your beneficiaries. And whatever the cash value you have left over belongs to the insurance company, not your relatives, family, loved ones, or beneficiaries. That's the reason why, like I said before, some insurance agent and insurance companies called whole life cash value, trust value insurance. Because when you purchase within the same $150 you pay for the whole life insurance. If you purchase a term life insurance with it, $100 is going for the life insurance. Depends on your age. Sometimes you don't need to pay that much. It could be 30, it could be 40, it could be 75, depends how old you are. And the rest, if you pay $100 just for the insurance and $50 for the investment, you invest that in the cash. You invest that on the mutual fund who pays you 8% or 10% or 12% or even more. I'm telling you, after 10, 15, 20, 25 years, you will have enough money available. You will not need insurance anymore, because the interest of that money that you got will be able to cover your bills. If you combine it, if you already retired, you combine that investment money with the social security you are receiving, so you will have enough money to live a decent life. So that's when buy term insurance and invest the difference is important, because when you buy term life insurance, whether you buy it for 10 years, 15 years, 20 years, 25 years, 30 years, or even 35 years, and you invest the difference, this is your money. When you need it, you don't need to borrow money out of it. And if you die, that money belongs to your family, to your relatives, to your loved ones, to your beneficiaries automatically. So it does not belong to the insurance company. There is a big difference between the cash value and buy the term, invest the difference, like you invest it in the mutual funds. That's what I do for myself, for my family, and that's what I like to sell to my clients. Now, me personally, as a financial service consultant, as an insurance representative, I suggest for myself, like I just finished to explain, and for my family, term life insurance. I chose the term life insurance and I invest the difference. I explain it clear. The reason why is because the difference that I invested is my money, is my loved one's money, is my family money. It belongs to them if I pass away. If I need money out of that investment, I don't need to borrow money from it, because it is my money. It does not belong to the insurance company. I buy the term and I invest the difference, which is a very good way to buy life insurance. For life insurance versus term life insurance. Life insurance quote. If you want to get a quote on the life insurance in the state of Florida, particularly in South Florida, you feel free to contact Anthony at 76 709 6577 or 305 974 6717. Life insurance, because in life they say there are two things. Two things can happen. Whether you live older or you die younger. You die unexpectedly, which is younger than expected. If you live older, you need money. That's why you need an investment plan, and that's where the buy the term, invest the difference combined. So you have an investment plan if you live older. If you die younger, you have the insurance part for your loved ones, for your family, for your relatives. Be properly protected just in case if you die younger, to minimize the financial trouble for your loved one. You can stop your, you can avoid your loved ones from calling friends and other family members for contributions to cover the final expenses. You can protect your dignity sometimes for a very small amount. South Florida, call Anthony, the insurance representative at 786-709-6577 or 305-974-6717. Which is right for you, whether you choose to purchase term life insurance or whole life is really up to you and is entirely dependent on your unique situation. The best thing you can do in making your decision is to speak with a qualified life insurance agent who can provide you with detailed information. That we invite you to call us if you are in the state of Florida. As a professional, I am dedicated to protecting my clients' welfare. I will provide you with high quality life insurance. South Florida, call Anthony, the insurance representative at 786-709-6577. Affordable life insurance, best price, best plan with the best company. South Florida, call us 305-974-6717 or 786-709-6577. We help people be properly protected. We offer low-cost life insurance by the term, invest the difference. If you are in the state of Florida, particularly in South Florida, call Anthony, the insurance representative at 786-709-6577 or 305-974-6717. Different types of life insurance: whole life insurance, permanent life insurance, variable life insurance, universal life insurance, and variable universal life insurance. There is a way to reduce your insurance premium. You can get more coverage for less money. For you and your entire family, no matter how many children you have or will have, all of them cover for the same low cost. South Florida, call us at 786-709-6577 or 305-974-6717. Be properly protected with a good insurance policy, affordable life insurance, best price, best plan with the best company. Family Treasure life insurance can be a great one. Very quick treasure. Call us 786-709-6577. The entire family can cover for the same low cost, for the same low price, no matter how many kids you have or will have, all cover under one policy. Secondly, there is a plan to better help yourself, your family, your friends, and other families to be properly protected. South Florida, call us 305-974-6717 or 786-709-6577. This is a term insurance versus whole life insurance. You can see and the term insurance said I am for a fixed maturity from 5 years to 35 years. Let's see, slash number 1. And the other side for whole life policy, he said I covered the insured for the entire life, so on and so for whole life guarantee premiums for life, tax deferred cash value, guarantee cash values, additional cash through dividends, protection from creditors and many states, non-forfeiture values, in most cases, tax-free cash withdrawals, tax-free death benefit. Term life insurance, you don't need to borrow money out of it. You buy the term and you invest the difference, that's your money. You invest it in a mutual fund from 8, 10, 12, 14% or more, and after a long period of time you will have a lot of money available for you with compound interest by the term invest the difference. I believe that's what I choose. It is better for me. If you think that's better for you too, find an insurance agent who are selling the term life insurance. But if you think whole life insurance is good for you, find agents who are selling whole life insurance. It's up to you to choose. But in general, if you need a life insurance in the state of Florida, you feel free to call us at 305-974-6717 or 76-709-6577. Insurance policy, South Florida, please call us. Thank you very much for watching and listening this audio video. I hope you find very good information in that particular video, and I promise you that the next video will be much more better than this video. We will bring you much more information. Once again, thank you. Visit knowledgefinancial.com and financialacademyschool.com. Our YouTube channel is www.youtube.com/knowledgefinancial and www.youtube.com/financial school. Thank you very much. See you the next time for the next video.